Hi, it's Peter Temple for Sunday, April the 23rd, and this is the market report for Monday, April the 25th. Well, I had a bit of a problem with the original audio on the first clip, so I'm just redoing the first little section here, and then we'll pick up on my original report. But what I want to do is look at the big picture first of all, and we're going to keep this relatively short tonight because this report is not a lot different really than the last report that I did last Sunday. We're in the very final wave. What we've done is just reconfirmed everything I said last week as we do this little finish up. We're in a big second wave right now, and this is the last report before the big turnover, I think on Thursday this coming week. So let's start with the largest cap index in the world, the New York Stock Exchange. We had this ending diagonal here at the top of the big wave up. This is a 2-day chart that we're looking at, and it was actually a double top. It's hard to see probably here, but we had a double top on May the 21st last year. Then we had this first wave down, and if I measure this out, it all measures exactly in terms of the subwaves, and that was one of the clues in terms of this being a first wave down. And I'm going to show you another clue when I'll show a chart of the G-Dow, the global Dow, and that sort of said the same thing. So that being a much bigger index, you pay attention to it, and everything was just lining up telling me the same thing. So I've had this as a first wave down ever since it first happened. Then we had an ABC up here, which is a corrective wave, and it has to get corrected down, which it did, but this was the conundrum here, because I called this a truncation for a while, but truncations are really rare, and so I again reminded of that. So I've never actually seen one in real time. So there's a couple in the Elliott Wave Principle book that they mentioned from decades ago, but the thing to remember about Elliott Wave is the waves always trace out the full pattern. And people think it's going to turn over and do this and that and all kinds of things without finishing the pattern, but it never does. So as long as you know what the pattern is and the wave that you're in, you can rest assured, and that's the great thing about Elliott Wave, that you're going to be able to trade it with confidence because it's going to finish up the pattern. Where you go wrong is if you don't have the correct wave. If you haven't actually done your wave count correctly, then that becomes the difficult thing. But now that we have cycles, and I tell you, this Andy Pancholi and his market timing report, which is on my site, is the most fabulous tool. I'm giving you the date that he's got in there of April 28th. He's nailed every turn. And so if you're looking for that part of it, this is the last time I'm going to actually tell you what the turn date is, but you're going to see that he'll be right again on the 28th, and that's the day after good old Janet Yellen talks. So we're going to see this turnover then, and this is the big second wave. So we had actually an ABC coming back up here, but the last wave, and always last waves are in 5 waves. They don't necessarily be fully motive because you won't get all of the waves necessarily having 5 waves within them, and in fact this was a wave in 3 here, this first wave. Then we had a second wave, third, fourth, and fifth, but ending waves are always in 5 waves. So there's another signal that this is a final wave, and it'll end up taking out this little correction here. So it really has to hit this top at around 10,700, 10,650 is what I have in here, and we have just 3 days to get there, and I'm pretty confident we will. Here's the other big elephant in my report, which is the global Dow. This is the daily chart, and I'll take you through this at the top. We had a double top up here again, very large double top, and that was the same. That was in actually June, so it was a little later than the S&P and the NYSE. But it came down in 5 waves, and this is a very obvious, there's a little double top here, so this was sort of a fourth, a very small first, and then a fourth, and then a big 5th wave down. Then we had this 1, 2, 3, and these waves all measure out exactly, and we had this 4th and 5th wave. So there was the big index, international index, telling me that this is a first wave down. So that gave me an awful lot of confidence that the US indices were doing a first wave down way back in the beginning here. And then we got down to a 1, we had 3 waves up, we had another 5 down here, except that this looks there's an extra wave in here. And so this was always a big question, and I had this I had this actually labeled as a 1, 2, 3, 4, 5 until I saw this last wave here, which was also in 3. So that gave me a little bit of a dilemma here is what's going on, and we ended up now having this ABC wave up. It's actually in 5 waves, but if you squint your eyes, you see that it's actually an AB. This wave here is very, very small, so you don't count it. So it's got a large fourth, which makes it an ABC, and this should reach this 2466 level or thereabouts before it turns down. So there's another indication. We've got a double second wave here. It looks very good, and we'll get a third wave down is the next one to go. Here is a 2-hour chart of the S&P 500, and I'm just taking this because it's 2 hours. You're only going to see back to December. This was actually the top of the market on December the 29th, or actually this one turned over a little earlier. This was the December 29th here, and so this would have been November the 3rd. So we had this, again, conundrum, which I had pegged as perhaps a truncation. But again, it sort of fooled me, and this thing coming down then was not a truncation, but it ended up being a very clear ABC, and that means that it has to retrace. And here's the 1, 2, 3, 4, 5, again an ending wave, and now we're just in the little tiny fourth wave here, and we'll end up with a double second just like everything else, and this will turn over for a huge drop. Here we are zoomed in to the S&P 500, so we can look at the 15-minute chart here, and we'll just look at this last wave up because I want to show what happened here. I relabeled this last week, and so that we thought we had an ending diagonal. The big dilemma was this area in here. And I guess if I was to zoom in, I may see 5 waves up here, but we had 5 waves very clearly here, and then we had what looked like an ABC, but it's actually a wave within a wave. So if you look at this smaller wave, starting with this one here, 2, 3, 4, 5, there's a larger wave, which is the yellow numbers, 1, 2, 3, 4, 5. So this is an actual 5-wave third wave, and there were no overlaps or anything labeling it this way, but it wasn't clear because of this 1, 2. So it's a 1, 2, 1, 2 pattern. I know somebody had asked me about that, but the weird thing about this third wave is usually it's within the larger wave. In other words, this 2 dropped down lower than this 2, which is the thing that I was not expecting, and I've really never seen that before, but I suppose that's okay. It's within the larger wave. It's just a very odd thing, and that really threw us for what this wave actually was. So I've relabeled it. We've got a fourth wave here. You'll see in ES, which is on the post, that ES is going to trace out a fourth wave triangle. This is not, and ES has got to do that because obviously it goes around the clock, and so there's a lot more time for it to work with. So it will do a fourth wave triangle and head up to the top. This is just going to do 5 waves up, so we should see 5 waves here. We're just at the top of the first wave, 2, 3, 4, and 5, and that should do it. Look for a top on probably Wednesday, Thursday, with a turn down starting Thursday. The actual cycle turn dates are Thursday, Friday, but I would think it'll probably happen right after Yellen the next morning, or even the top of Wednesday. So we'll see what happens there. It's exciting. We'll get a big third wave down. I have put the targets for that in the post. So one last chart just to round this all off. This is the daily chart of gold, and I know I see a lot of interest out there in gold. I haven't put it up lately because it's been doing just what I forecast quite some time ago. There was this ending diagonal which I saw when we were in the early stages of it, and I called the turn here. It in fact went up into 5 waves, and I had thought it would get to this level here, 1300, just a little shy of that, but that's the previous fourth wave. And so it's done 5 waves. You can see and count them, 1, 2, 3, 4, 5 up, and we'll do 3 waves down. So we've got the A is done, the B is done, and we should go down to the C wave of that, which is actually the larger B, because we're going to have a big wave, a big C wave up after that. So my targets here, it's either, there's a way you can measure 2 different target areas. One of them, of course, is the 62% retrace level of this wave up. So the second wave should come down to 62%, which is this 1136 number. You can also measure the A wave here, and you can take a couple of different points. If you measure that, then the extrapolation 1.61.8 or 1.6 level would take you to 1155, and that's a typical place for it to fall. But usually these two line up, so I would say probably it'll go to 62%, which, by the way, if you were to just drop this down, is also the perfect length of the C wave. If you just take the C wave, 1.618 times the A wave gives you the 62% level. So I would expect that's where we'll end up. Watch for a turn a little bit higher, but I would guess we're going to turn a little bit lower. So that is the market report for April the 25th. It should be an exciting week.